Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Shane Riedel, founder and CEO of Elucidate, a company that uses data analysis to tackle financial crime head on. Shane, it's great to have you with us. Welcome to Trade Talks.
Thanks very much, Jill. Greetings from Berlin.
Well, and greetings from Times Square, New York City. And Shane, with so much money invested yearly, why are banks still exposed to financial crime risk?
We know that there are banks out there that are spending up to 10% of their revenue to manage financial crime risk. The issue is that financial crime is a systemic problem. It's not an operational problem. It's not really even a regulatory problem in that sense. No one bank, regardless of the resources available to them, can solve this problem alone. What we like to say when we talk to banks is that financial crime is a network-based problem and it requires a network-based solution.
What are the biggest pain points for banks in tackling financial crime?
So in reality, it's the relationship to other banks. There's less data transparency, there's less direct interaction between institutions. All the big financial crime scandals from HSBC through to Blue River Bank have always involved bank-to-bank relationships. It's never been sort of the retail or the corporate customers that have created the truly big systemic problems that cause the massive scandals that we've seen over the past 10 or 15 years.
Elucidate introduced the concept of financial crime risk-based pricing at the CBOS event earlier this month. Can you tell us more about that?
Yeah, sure. So, the idea of pricing risk is of course a super established concept. It works in loans, it works in mortgages to manage credit risk, and it can work in financial crime risk. So what we've done is we've built a framework that enables financial institutions to price risk at a transactional level with accuracy and based on data, and using and providing transparency across the entire market to sort of enable that exchange.
And Shane, I would imagine banks are already pricing this risk today.
Yeah, not really. So in the bank-to-bank relationships, so in things like trade or payments or prime brokerage, the pricing is typically volume-based. So if financial crime is priced, it's based on market risk, but we know that risk isn't homogeneous across an entire country. So market risk is a poor proxy for financial crime risk. We talked about the amount that are being spent by banks, and the OCC and other regulators have imposed sort of billions of dollars in fines around financial crime risk. But despite that, fraud and financial crime are worse than ever. So clearly, the mechanism that we're trying to use today to manage this risk is not working in its entirety.
So how does this solve the problems that we spoke about earlier in the interview?
Yeah, pricing financial crime risk really fundamentally changes the incentives in the market. The only way to systemically address financial crime is to undermine the criminal's profitability. Put another way, perhaps more positively, the market needs to reward the good banks who are actually working to reduce financial crime risk in a way that frankly is just not happening today in the market. So good behavior is rewarded through lower pricing. Bad behavior is penalized through higher pricing. It's a really universal and intuitive concept, and it's urgently needed in this space. So that's why, for us, that's why we've gravitated towards financial crime risk pricing, and that's why we view it as being so transformational for the market.
All right, Shane, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.